We should be able to see the happy smiling faces of our three panelists. We have Nick Raper, we have Craig Tilletson, and of course we have Alan Ainsworth. Nick Raper, you head up the UK at Nuapay. Tell us about your company, Swift Pen Portrait, please.
Thanks, Louise. So Nuapay is an account-to-account payment platform. So we basically enable our customers to get paid and then pay out via a range of non-card solutions. And historically, that's been direct debit and credit transfers. But more and more, we're seeing customers wanting to be able to accept money via open banking solutions.
Thank you very much, Nick. Next up, we have Craig Tilletson. Craig, you're the co-founder and CEO at Ordo. Describe Ordo.
Very briefly, we operate a cloud-based platform that lets businesses from large through to small, as well as consumers, send what we call smart requests for payment to their end customers. And the other part of our proposition is we securely pass those requests to those customers, and then we use open banking and faster payments to allow them to make those payments.
Perfect, thank you, Craig. And last but by no means least, we have Alan Ainsworth. Alan, you are Head of Policy at the Open Banking Implementation Entity. Please bring your role to life.
So many of you on this call will know that we recently got agreement from the CMA to a revised roadmap for open banking. So the development of that roadmap was my team's responsibility, obviously working with many participants and stakeholders throughout the open banking ecosystem. But we work on the roadmap, and our next task will be to deliver what that roadmap sets out for OBIE to deliver.
And did you set a super high and challenging bar, Alan?
Well, I think the bar has been set in terms of what we've already delivered. So we've already delivered a standard.
That was a political answer, Alan. That was excellent.
Thank you. But we have already delivered a standard that over 1 million people, and that back in January, are using, individual end users. So I think what we've shown is that we can deliver something that is usable by people and businesses in the UK, primarily the UK. But what we now want to do clearly is build on that foundation and make this a success for many, many more consumers and small businesses.
Righty-ho, let's kick off with our first question. Innovation in payments is our subject matter today. But I think innovation in payments suffers from what I call the John Lewis issue. People just think it means buying stuff online from John Lewis, but doing it from my bank in some way. Talk to me about what innovation in payments means to you. Nick, I'm going to come to you first. It's not just e-commerce, is it?
Thanks, Louise. No, I don't think it is. I mean, when we sort of started down this open banking path and we talked about payments, I think a lot of people saw it as exactly that. This would be a new checkout mechanism on various e-com websites. But actually, where we're seeing a lot of the interest and benefits of open banking is a range of other use cases that might be sort of underserved or have some gaps in solutions today. And I think some of those areas that we're seeing most is probably the bill pay sector. So people like financial services providers, insurance companies, etc., that take payments through a range of different mechanisms, as well as the SME sector. And equally, we're starting to see a lot of interest from charities as well. And I think in each of those sectors, there's specific things that we can address with unique use cases. So with the bill pay sector, and you take an insurer, for example, someone like Admiral or Liverpool Victoria, they take payments online, but they also take payments in other forums as well. Now, whether that be over the phone or even through mailing out letters and asking people to respond to letters as well. And so where we're working on is developing solutions for those other channels as well. So whether that be using pay-by-link solutions to enable customers over the phone to make a secure payment via bank transfer, or using QR and other mechanisms to enable people to pay in response to a letter, or equally in small shops as well. So there's a range of sort of other innovation that's going on around the payment initiation capability to really bring this to life, and to we're starting to really now see some accelerated adoption in some areas.
It's not just e-commerce, it goes far wider than that. And it's not just payment initiation. Surely it's got to be the entire customer journey, the full experience, so that you can add value all the way through to funds collected, better settlement, reconciliation. Is that right?
Yeah, that's right. And I think that's another area that, again, as a payment initiator, it's a fantastic capability, but it's just one piece of the journey. And when you go and talk to a merchant, often they don't want to see hundreds of transactions coming into their everyday bank account on a daily basis. And they don't want to have to put some of the reconciliation effort around that or identify any missed transactions. So part of what we're building is the full set of capabilities to help manage that, to provide customers or merchants with the reconciliation statements, to provide them with real-time webhooks when payments might have failed, all of that to make it a really complete payment method.
So everything up to and including traceability then?
Absolutely. I mean, traceability is a big problem, and certainly, when we're talking to people in the bill pay sector, and you think about some of the prepaid cards or the credit card businesses here, today they already take a lot of bank transfers, but they have a lot of reconciliation issues with those transfers because people will type in the wrong reference numbers or wrong details and things like that. And part of the solution here is really around helping them to address some of those reconciliation issues at the back end and save them money in that way, by providing complete traceability around the end-to-end payment.
Something Nick said there really resonated with me, Alan. He talked about the bill pay sector. And doesn't this mean that there's a really big case here for stimulating the marketplace, looking beyond e-commerce and payment initiation? Surely we should be stimulating the marketplace with something of a cattle prod. I can see an enormous use case, a whopper of a use case for government. Should you be stimulating that market, Alan?
Absolutely. And, I think what Nick has said is very good. I mean, let's not ignore e-commerce. E-commerce could be a significant use case for open banking, but there are other use cases where, the absence of current refund functionality, for example, would not be a problem in certain sectors such as bill payment. And the examples Nick has referenced are things like government, so HMRC. So I know that when I pay my tax, I've got to put in a unique reference code. Invariably, I may get that wrong. And of course, then it takes some time for that to be reconciled by HMRC. Now, if that can be done by a payment initiator who can do all that for you, with the assistance, obviously, of HMRC as the end payee, that can solve some of HMRC's problem. And you can take that problem and look at utilities, so water bills, gas bills, etc., where that's a real issue. So what we're doing, we have a team in OBIE that's looking to look at those different sectors, such as government, such as utilities, and bring open banking to them with the assistance clearly of actual providers that can work with the HMRCs of this world and utilities of this world to bring it to life and make it happen. But what we're doing at the top end of that chain is just make sure people are aware of this possibility and the possibility that open banking can deliver for not just utilities and government, but other sectors as well and other use cases. And I particularly like Nick's example of charities. We haven't got lots of payment transactions using open banking at the moment. It's less than 1% of all API calls. But what we have noticed very recently is a significant uptick from a low base of payment transactions using open banking. And most of that has been in the charity sector. And there's been some very high profile charity work that's been done around the current crisis, which has been using open banking payments.
Thank you, Alan. Craig, this brings to mind quite a big encompassing point here. Everything that we've heard so far stimulates me to ask you, doesn't this mean the end of the big industry incumbent funded program if we're talking about innovation in payments?
I think it does. And I think building on some of Nick's and Alan's comments, if you put all these components together, whether it be enabling an open banking payment, reconciliation, etc., I think what we're talking about is a bit of ecosystem that's missing, or a bit of product that's missing in our market, which we would describe as a request for payment. A digital secure method of a business sending a request for payment that can then use open banking, can then be paid back through things like faster payments. Now, historically, before the availability of open banking, which made payments across a wide variety of banks immediately available, this would be the territory of a big industry program. And you can take your mind back to things like PayM, where lots of different institutions had to be aligned to bring a ubiquitous proposition to market. Now, I think we can do that independently, we can do that competitively, and we therefore don't need some of these big programs. Now, you may say, well, a big program, what harm can it do? And I think the challenge is, the harm it can do, it can start to stifle competition. It can develop a particular solution rather than allowing an Ordo or a Nuapay to come up with variations and then fight it out in the market to deliver the best for customers. So I think you're right. There is a big space to be filled, but the immediate sort of jumping to, we need a big industry program to do this, doesn't necessarily make sense.
Okay, so if I were to just play back your answer to make sure I've understood it, your argument is that there is no longer a compelling use case for a lowest common denominator incumbent funded program. Innovators can innovate on data. So good times ahead for those feisty innovators and those true competitors. Is that a reasonable summary of what you said? We don't need the big monolithic program.
I think it's a better, I mean, to give you a specific example, Ordo has one of a number of competing requests for payment services. We can deliver a service that works for any biller with all their customers without having to put an industry program to coordinate the availability of banks. Because actually Alan and the OBIE have already done that once with the protocols and the regulatory structure that give us access to payment initiation. So let's build on that last necessary industry transformation to then let competition drive individual solutions that can work for everybody.
Thank you very much. So we've covered some things there about innovation, but innovation without adoption is a pointless and an expensive exercise. So we need adoption for people to really experience this, to know it's working, to be making a difference, both to individuals and then right up to that economic level. We need corporate customers to adopt the services. We need end customers, whether those are retail customers or small businesses, for example, to adopt it. And fundamentally, we need banks to be adopting too. So Nick, I'm going to come to you first at Nuapay. Talk to me about the barriers to corporate and consumer adoption and how to overcome them. I mean, surely you've done some work in this area. And if you are chatting, you are on mute.
Yes, sorry, it had to happen. So no, I think that's absolutely right. And I think, you know, from a corporate perspective, we actually see that there's a lot of interest from corporates, and they're particularly engaged on the benefits. So, you know, they get real-time speed of pay, they get lower costs, and they also get some, you know, much simpler sort of reconciliations. And increasingly, from a security perspective, we're seeing a lot of corporates look to open banking as a way to manage some of their strong customer authentication requirements as well. So I think, from a corporate perspective, there's a lot of interest. But the questions we often get asked are, you know, what about, you know, the consumer experience, and how do we push consumers into this method, you know, so that they can leverage the benefits? And I think, you know, the OBIE has done a great job with the banks in terms of improving the customer experience. And I think now, you know, for customers that are paying on their mobile device, for most banks, it's a pretty good customer experience. And they have a fairly seamless sort of data-free entry. But what you're sort of seeing is, I think we still need to get customers to adopt it. And it's a bit, you know, consumers have habits. They pay with what they know and what they pay with today. And it's really about how do we start to nudge consumers across to open banking, and we do it in the right environment as well. So, you know, if they're paying on a mobile device, and in some examples, it's pretty seamless. And in fact, I think there was one customer, one sort of person who I saw on LinkedIn the other day said they've just made their first payment via open banking, and you know, what a wonderful experience it was. And so I think we really have to think about, you know, how we can kind of nudge customers to take that leap and make that first payment. And I think there's, you know, part of it is around the messaging to consumers and helping them to understand the security benefits of open banking and what it does give them. And then also, I think we're starting to see the emergence of some different pay marks or brands in the market as well. So there's been, the launch by a couple of the big players around, specific trademarks or pay marks. But I also think we're starting to see a few smaller players come out as well. So I think one of the ones that's quite interesting is a company called Fellow that are developing a payment method specifically in the charities space. And part of their proposition is around the social benefits of using open banking and being able to help deliver charities a faster, cleaner payment experience at lower cost. And so they're really trying to use the consumers, nudge the consumers by giving them a bit of a positive good, if you like, around paying via open banking.
So I think one of the things that I think I heard you half say, but not fully come out and say it, is the real corporate benefit here is reduced cost. I think you can probably deliver the service for them at a lower cost. What you said there about consumer adoption was about fear factor. We all remember the first time we paid using a credit card online, for example, and how terrifying that was back in the day. So it can be quite scary, I would imagine, as a consumer, if you didn't know what was happening, to see your mobile app open for you to authorize a payment. So I think your argument there is that it's about forming habits. They need to go through that experience. It's not bad, it might even be pretty good, and then repeatedly have that experience. I want to throw that over to Alan. Am I right? Is it about just forming new habits?
I think it can be. We all know the contactless example of when a few merchants started to offer contactless, in particular TfL in London. More and more people became comfortable using it, and we started to see significant growth. But I think that example is not the best example, because that did take a long time. I mean, probably 10 years between people using it regularly on London Underground from the first contactless card being issued. And I don't think it has to take that long. And what we're seeing in open banking is some good use cases coming in where people are starting to use it and recognizing, really like what Nick was saying about the experience actually being a good and positive experience. And once people start to recognize that this works actually quite well and increasingly well compared to where it was perhaps 12 months ago, they'll start to use it more and more. So getting that muscle memory in, so people are using it more and more. And so why I mentioned at the beginning of this session around the importance of getting it out to the utilities, to getting it out to government. Once people get used to using open banking enabled payments, there won't be a fear factor anymore. So when it crops up as a QR code type payment that Nick was referencing, or when it crops up in a request for payment from the likes of OrdoPay, people will recognize it as something they've done before. And of course, it's redirecting you to your bank application. So the fear factor in terms of authentication isn't there. It's not unknown. It's a very familiar place for most people. I think you'll start to see pick up a lot more quickly than that contactless example I used.
So we talked here about corporate adoption, we talked about consumer adoption. Craig, talk to me about the barriers to bank adoption. I know they had to build the APIs in the first place, but actually really making, getting these services adopted. Isn't it about treating some of those PIS services as critical? And isn't it about understanding and communicating the fact that this is a more secure, less fraudulent route? Craig?
Yeah, I think it is. I mean, building on the conversation you've just had, it's important not to overstate the challenge to a consumer of doing an open banking payment. Our experience is that if consumers are comfortable with the biller who's sending them the request, the actions they take is they click a link, they are taken to their mobile banking app, which shows them what to do, and they authorize it. Actually, they're not thinking about open banking. They're in a territory that they recognize and is safe. And actually, a lot of the time, that is a really fantastic, very slick, very comfortable experience. But the point you're making is there are still cases on the margin where it's not working properly, where there are segments of a customer for a particular bank that can't use payment initiation properly. And it's really important that we don't undermine confidence in the ease of use by those fixes taking too long. And an example you get is we have lots of conversations with account servicing PSPs with banks to say, could you improve that? very often the answer is, yeah, we'll straight on it. Occasionally the answer is, well, no, but you're the first PISP that's ever identified this issue, and therefore it's only affecting a couple of customers. We'll put it in our prioritization process and come to it. Now, I think that maybe the analogy, if that was a homegrown important product being launched by a bank, you'd put a different set of thresholds on prioritization. You'd say, this is a vital product for us as a bank. We need to stick that up the prioritization loop. And I think our sense is that a few banks need to think through about where the regulation is trying to take us, which is we want this to work really well for everybody. And actually, you need to move pretty fast to fix some of these things, because it's almost all made in their first contact. If the first time you do an open banking payment is a good, slick, comfortable experience, you're probably sold at that point. If, however, it becomes either a poor user experience because of the credentials you have to put in, or more importantly, it just doesn't work, then you're going to be concerned about trying that again. And I think it's important that we get that focus on. All these things have got to work perfectly for all customers.
What about that point about fraud? I think there's some sense that sometimes there's a sense that banks might be using fraud concerns, fraud worries as a way of undermining innovative and secure third-party provider services. Is that
I think that may be the case, but I think it's probably a bit more accidental. We know there's a huge amount of pressure on banks to address authorized push payment fraud, the very slow and painful introduction of confirmation of payee, the requirement to put lots of messages up, do you know who you're paying? That is one set of solutions to the fraud problem. My view is it's an incomplete set of solutions. It's also not very customer friendly. It's just making the whole journey tough. And actually the most extreme is you see some banks advertising, just don't use push payments. Use a good old debit card or a credit card because it's safer. Now the challenge is TPPs like us and others are developing solutions that don't just live with the level of fraud and risk that we have today, but actually have structured and designed their services and their architectures to remove some of those risks and to make it a safer experience for consumers. So be careful when you're describing your own experiences and your own services as a bank, that you don't put off people from using potentially more strategic solutions that do allow a consumer and a business to get all the benefits of speed and cost and reliability from a service like faster payments, but without the sorts of frauds and the woolly edges that have grown over the last few years. So that is on my call. Is just be a bit careful how you're promoting this to customers.
Okay. So Alan, your role in this, if we listen to everything that we've heard there from Nick and from Craig, surely your role in this is a couple of things. One, you've got to get stuff fixed, regardless of how many current end customers it's impacting, because it's about the potential. So surely it's about getting those little things fixed, and surely it's also enriching the standard, making it broader, making it deeper, and making it more valuable. Surely that's your role.
100% agree with you. That is our prime role. And I mean, not to go too far into the detail of what the revised roadmap says, but one of the focus points of that was to look at the kind of issues that have just been mentioned and fix those basics. So, I mean, clearly, and it's good to hear that Nick in particular was seeing that the experience is a lot better than it used to be and quite slick, making sure that all of the bank APIs are conforming to the standard. It's important that any TPP can connect and know exactly what they're connecting to, and that's the purpose of a standard. And to make sure that that conformance level is up to date and up to speed and up to scratch. So getting that right is important, and getting those performance levels to the level that people would expect. So making sure that the interface is available to the TPP when they connect, and making sure that response times are reasonable, so that the customer is not waiting with an egg timer on their screen. So making sure this whole thing works is so important. That's the reason we came out with the customer experience guidelines. That's the reason we set out that we wanted app-to-app authentication to be part of the standard in the UK. And that's what's enabling some of the TPPs that are in market to offer the sort of services that they are in a usable way for consumers. So we recognise that, and we're going to put a lot of work in through 2020 to fix some of those basics. Specifically, one of the things we're looking at is what we're calling root cause analysis. So we know that a lot of journeys, not too many, but some, break and don't complete. We want to understand what's beneath that so that we can fix that too. So a focus on performance, a focus on performance over the course of the rest of this year. You asked me a second question around functionality, and you know, sorting out performance is one side of it, but making sure the standard can enable a wide range of use cases is another. We have, as part of the standard, refund functionality. It's not significant in terms of technical complexity. All it means is that the PISP can get hold of the sort code and account number and make a reverse payment using that information. So it's not that we create the refund functionality per se, but that has gone into the standard and is being implemented by the CMA 9 at the moment. That's one type of functionality. The other thing that we're looking at, which is more complicated, is how to enable variable recurring payments. Mm-hmm. And what I mean by that is some open banking alternative to variable direct debits or card on file or recurring transactions using a card. So something with a long-lived consent that doesn't rely on SCA each and every time a payment is made. So for example, paying a variable mobile phone bill or a variable utility bill. So we're looking at those standards and we're looking at how that kind of a standard can enable sweeping to take place, which is an automated way of moving surplus funds in one account to another, or an automated way of using an unbundled overdraft offering. And that's something the CMA were very keen on when they wrote their market report following their investigation into retail banking.
Thank you, Alan. I just want to come back to Nick for a second, because I'm sure everything you heard there from Alan was a sort of manna to your ears, because you have said, I think quite clearly, actually it's about the performance. It's about getting that 4 or is it 5 nines availability that you want to see. Can you build your service on the kind of availability and performance that you have at the moment?
Yeah, no, that's right, Louise. And I think that's the other area. And look, I know the OBIE is working on it as well. And I think even, you know, in the recent April data has now been released, and the service availability from the banks, you know, has stepped up from where it was previously. I think they're sort of 98.5% now. So like it's definitely improving. But if you compare that to some of the other payment mechanisms in the market today, that yes, at 99.999, yeah, it's a very good customer experience and a very good merchant experience, and we need, you know, to do some work to get to there as well. Now, whether we kind of get all the way there or at least sort of start to close more of the gap, that's certainly, you know, a question that we get asked quite often by merchants.
Okay, I want to just ask 1 or 2 more questions myself. Then we've got plenty of time for some questions from the audience. Thank you for the ones you're sending in. Is this just a storm in a teacup at the moment? A big fuss over nothing. Volumes are so low as to really not be worth bothering with. You know, Craig, Alan, you mentioned the stats from your OBIE status report at the end of last year. Good progress on AIS, substantial work to do on PIS, less than 1% of all open banking transactions are payments. You know, Craig, surely we should just give up.
Well, I think you know what my answer would be. Clearly, no. We've committed a huge amount of investment, time, and energy to this proposition, and I guess the reality is that payment initiation, I think, has only reached the threshold of simple and effective usability en masse in the last few months. I used to run faster payments. If you look back, you could have had this debate 18 months into the operation of faster payments and say, well, we've got tens of thousands of payments going through. This is never going to be anything. Faster payments did more than 2 billion transactions, moved £2 trillion last year, 10 years in. These things take some time to develop. And I think our job is to make sure that we both promote the use of these services and make sure the performance is there, both in terms of 4 nines or even 5 nines. And that as we naturally identify issues that need fixing with ASPSPs, because it's impossible with no volume to test every single use case, that as we identify issues, so for example, we discovered a large ASPSP that won't process a payment payment initiation if you put a account title of more than 20 characters. And just for reference, the limit for a confirmation of payee account is 140 characters. And they say, well, we don't allow our customers to put more than 20 characters in. That's why we don't initiate that payment. Well, you don't provide any error messaging back. You don't explain what the issue is. Those things need to be fixed so that we have a pretty good service, which we're pretty much getting there. And then businesses like ourselves and others on the call today and others that are not involved will go and promote this to businesses and consumers and will drive uptake. So I think we've got to have a little bit of patience on the one hand in terms of growth and a little bit of impatience as we work across the ecosystem with OBIE and FCA to make sure that everybody does everything they can to remove any blocks and barriers we identify. But I think in the end, the proposition to allow, there is huge value to both businesses and consumers in the UK from payment initiation. Let's make sure we don't stop that prematurely by saying, if we didn't get this done in 3 months, it's not going to work. Our view is it does work.
Thank you, Craig. Nick, I want to come to you. Bearing in mind what Craig has just said, we must carry on, the volume is coming, the use cases are coming. What do we need to do to protect all of the protagonists that Craig just named? What do we need to do to protect our ecosystem?
I completely agree with both Alan and Craig. I think the volumes are coming, and we've started to see a bit of an increase in the OBIE data, and I think we're going to see quite a bit more over the next 6 months based on some of the things that I've seen in the market and merchants going live. And I think the other thing that we need to think about is we are seeing the banks, they're warning about people making bank transfers, and for ages we have been conditioned to not make a bank transfer unless we kind of know exactly who it is and have validation on that. But there's actually a lot of things that as TPPs we can do to help manage down that risk and reduce some of the incidences of things like APP fraud or other sorts of phishing attempts. And I think as a community, if we want to make sure that the consumer market does get confidence in open banking and is confident making payments via open banking, we have a responsibility to work together to make sure that we protect that and make sure we put in place the right mechanisms and controls to help reduce some of those fraud events as well.
Thank you very much, Nick. I like that summary for you, Alan, which is we need a blend of patience and impatience to get where we need to be going. I was just taking a moment there to look at the questions we've had in from our audience. I will come to Alan with this question. What were the challenges around establishing the strong customer authentication journey? And a crisp answer, Alan, because I want to get through several questions here.
Well, the good thing is that we piggyback the strong customer authentication journey that the banks use. The authentication is done at the bank, and the banks were already doing a lot of strong customer authentication, particularly in app, before the mandate came out from PSD2. So the good news is we didn't actually have to do any work. The work that we did do was the customer experience guidelines and mandating app-to-app redirection. And I think that's what's enabling customers to have much simpler journeys than would otherwise be the case. And of course, if they're done well and they're done quickly and they work, it's a really seamless experience for a consumer or for a small business.
There's a follow-up question here. Are the strong customer exemptions left to the discretion of banks a barrier to consumer adoption?
If you're asking me that question, I don't think so, to be honest. I think if it's in-app, in most cases, for people who've got a modern mobile phone, SCA is as easy as not using SCA, and there is no real need to use the exemptions. So I don't see that the exemptions are really a barrier to consumer adoption at all.
I think that's right, and I think we've been working with one client on comparing side by side the various customer journeys that they have of people going through a card payment and people going through an open banking payment, and the it's different bank by bank, I'll admit, but certainly when cards are using strong customer authentication, it can actually be a much worse journey from the customer's perspective.
Question, I'm going to go first with Craig for this question. Surely the biggest obstacles to payment initiation services are the card interchange fees. Banks, including challengers, won't give up that interchange income, they are, in a habit-forming sense, dependent on this narcotic. Do you agree?
I think I would agree with that if services like requests for payment were being delivered to market by banks, hence our earlier conversation about the Pay.UK initiative. They're not, and in some respects, it's absolutely reversed. They may be a narcotic for banks and card schemes, but actually they're the fuel for our businesses, for our business case, which is if you want to avoid paying interchange fees, then use services like Ordo and others that exploit open banking, and you can bypass that.
Another question for you here, Craig. Reading between the lines, are you suggesting that Pay.UK should not be developing a request to pay standard? Without the standard, how do you avoid multiple closed loop providers, which surely is not in the interest of either consumers or businesses?
But I think that's with all due respect, that's a thought process that is a pre-open banking. The Ordo service is not a closed loop. We work with pretty much every bank in the UK, and we can coexist with other competitive providers. If there's an enhanced customer experience from interworking and interworking, we can do what the mobile industry did 20 years ago, which is working out that text messaging between yourself and other on-network customers would be better if you extended it across multiple networks, and we can build an interchange model or an interworking model. But that can be done on a bilateral and multilateral basis between players. Doesn't need a coordination and a standardization process that has as its backdrop a 5 or 10 year cycle of agreeing standards. So I think it's unnecessary in the world that open banking has enabled.
Unnecessary in the world that open banking has enabled. Interesting thought. I'm going to come to Nick with this question. How do you deal with KYC and AML, particularly where the payment is just a money transfer from person to person rather than paying for a good or service?
So look, I think that's a challenge, and I think it's one of the areas where, you know, as providers, we need to look at our processes. Certainly at Nuapay, we onboard and do, you know, full KYC and AML due diligence on all of the merchants that we work with, and we don't provide our customers with the option of making peer-to-peer payments. We don't see that's something that we want to do at the moment.
Thank you very much. I'm scrolling through the questions. Having asked for them, I've been rewarded with a deluge. Thank you all very much. Coming back to Craig on this, what options are there for e-commerce businesses looking to drive PIS uptake by their customers? It can't be done by price, sure, due to the surcharging ban. Do you see this as a potential issue?
I think the surcharging ban is an interesting question, and certainly when we've talked to Treasury, they go, well, we're trying to avoid a premium. We're not necessarily sure we want to stop innovative new payment services coming into the UK. So I think that's a slightly open question, and there may be some government movement there. I think in the end, you drive it in terms of ease of use. If you, an e-commerce example, e-commerce use of Ordo, as a consumer, you say, I want to pay with Ordo. Do you type in a card number? Do you type in any account details? Do you type in your CVV2? Do you type in your address? You don't do any of those. You get a message or you get a screen pops up which says, I want to pay from here, and you go, yes. So I think there is ease of use and simplification of the journey, which can be levers you can pull. There are also, even outside the constraints, there are premium services that you could offer off the back of this payment method. So I think let's not take the current view of the legislation as absolutely firm, because it's slightly counterintuitive that you don't want to allow innovative solutions to come to market, but also think creatively about the customer experience benefits of open banking enabled payments.
A question for Alan. Has the open banking standard in the UK gone further than the rest of the EU, or is it an absolutely level playing field with the same standards and features?
That's a great question. I think what it's done differently is it is a standard. So the way it is implemented in the UK by at least the 9, but more than the 9, is consistent. So whereas other standards are a bit more pick and mix. So I think a third party has a better idea of what to expect in the UK. But of course, what we have built is something that enables PSD2 compliance. So the only elements for particularly non-CMA9 banks that they have to implement are what they have to implement for PSD2, and that's the same throughout Europe. but it will look the same and feel the same to any third party using that standard. We have built additional functionality in that standard that is a requirement for the CMA9, but not for other banks. One example is refund functionality. There's other functionality in there that is a little bit ahead of what PSD2 is asking for. But as I said, that's only mandatory for those big 9 banks in the UK, not for everybody. So refunds, and if VRPs go ahead, it's variable recurring payments, that could be optional. It could be mandatory for sweeping for those 9 banks. What we'd hope is that other banks see the benefits of offering those to customers, because customers want to use that functionality and want to benefit for them. So other banks will take on and use that part of the standard as things go forward, but they're not required to by the FCA.
Thank you very much, Alan. Thank you, Craig. And thank you, Nick. In fact, thank you to all of our panelists and presenters today. I'd also like to thank the audience, keeping me on my toes with all of your questions. And I think we can look forward to a piquant blend of patience and impatience as we move towards our innovation in payments powered by open banking. Thank you to Constanza and Hugo for bringing us all together for this session. Thank you.